everyone, welcome back to the channel. Welcome to PII Testimonial number 5. I absolutely love doing these videos, and I am joined by Mr. Jordan Collier, who's actually a fellow YouTuber. We'll talk all about that. So Jordan, how's it going, man? Thanks so much for being here.
Adriano, thank you for bringing me on. I know we've kind of been aware of each other for the past little while, so it's a great opportunity to actually, for the first time, just connect with one another in this
For,
format.
for sure, for sure. We'll talk all about your situation. We'll talk about investing. We'll freestyle it as much as we can. So let's just start off by, introduce yourself to the audience, who you are, how old you are, career, kids, married, whatever you want to tell us. Go ahead.
Yeah, okay. So I am, like you, fellow Canadian. I live in a suburb of Vancouver, in the by far the most expensive city in the world. Well, not in the world, but at least in Canada. Yes, I am married. I'm 33. My wife is 32. We have 3 kids, 7, 5, and 1. And yeah, you know what? I just got started investing in the stock market about 3 years ago. It's basically about 3 years to the month.
3 years ago, okay.
Yeah.
All right, cool.
Um,
What do you do for work? What kind of career are you in? I know you have a YouTube channel. We'll talk about that. That's more of a side hustle thing for you now, I'm assuming. But what do you do for work?
yeah, I would. Back when I graduated high school in 2008, I took what would you call that? Just a jump year, or just a year, just to kind of figure things out. I didn't know what I wanted to do, and then in 2009, I went to BCIT, which is our it's the biggest polytechnic university for trades
Okay.
here in the Lower Mainland. So I went there. I wasn't really sure. I took up like a piping trade, and by piping trade, it's a mix of steam fitting, plumbing, sprinkler fitting. And after taking that, I decided to get into plumbing, mainly because plumbing just has a really pretty easy barrier of entry to
Yeah.
get into. The cost was pretty low. Tuition was like really low. And basically been doing that for about 13 years. 5 years after I started, I joined C-SPAN Vancouver Shipyards. Something I could tell you now, I just did not expect, going from doing plumbing work in high rises and mechanical rooms and schools and law buildings and all that good stuff, to doing pipe fitting on Coast Guard vessels and Navy ships
That's
for,
cool.
just for our men and women in arms, right? It just didn't expect that, but basically we're currently in what's called the National Shipbuilding Strategy, which is the government will advertise it as a once in a generation kind of project. I think of it more as a once in an every other generation kind of project. A lot of our ships that we're working on are to replace ships that are 50 years old,
Right.
or older. So it is a busy place, and I lead people there, mentor, teach, and also lead crews to getting all the different piping systems installed on the ship. So it's really interesting. I really enjoy the work. It's
Well, that's good. Very impressive. I mean,
yeah.
everyone needs plumbers. We all need plumbers. I mean, very, very undervalued. And I hope I'm sure you get paid really, really well. And I will have to say, you deserve every penny and probably more. So,
Thank you, sir.
thanks for sharing that. Let's get into investing now. That's what this channel is all about. So, give me
Absolutely.
just maybe a quick background. What kind of investing experience or knowledge did you have? Do you have now? Like, what's your investing knowledge, would you say, right now?
Right. So growing up, it was just me and my mom. So there wasn't there like in the house there really wasn't any financial talk. My dad has been involved in real estate to varying
Mm-hmm.
degrees for a while. So once I graduated high school, I moved in with my dad and my 3 siblings and my stepmom, just because I was feeling like I was losing a bit of a connection with them. So decided it would be, I think, a wise move, and also just to be closer to my dad as well during that period of time. But anyway, my dad, he really enjoys real estate, so I got basically all my paychecks. Those early plumbing paychecks went towards, as much as I could help, towards investing in different properties around the Greater Vancouver area. All kinds. We've done houses, townhouses, condos. We'd buy them, renovate them, flip them. So um, um, I was more or less doing the grunt work. I didn't really have much of an interest, unfortunately. In
Okay.
hindsight, yeah, 2020, I wish I had more of an interest back then, but I was always a good saver. So I just hand over some cash every paycheck, and that would go into investing into the next property, and we'd just flip one and move over. And then maybe when I was about 27, I just, my wife and I, we had our first kid at the time, and we just decided, pull our investment money from the renovations, and we decided to buy our own place, which is awesome because I couldn't touch that money at all. It was not liquid. It was just hard to get at, and but this was the right time to buy. We bought in August of 2017. And then probably then COVID happened, of course, and like I said, around 3 years ago to this month, I had someone at work who actually who he just came up to me, and very, I would say, someone I look up highly to, someone
Okay.
I value their opinion with stocks and whatnot. The guy is a multi-millionaire, absolutely. The kind of guy who sold actually his whole portfolio before the crash of 2020 and bought back everything. So
Really?
anyway, he asked me, he basically posed the question, what do you know what a dividend is? I'm
Right.
like, I have no idea. Like, I don't know. It's just someone pays you. He's like, you should look into it. And so I started to, and boy, that rabbit hole sure took me into things like the first few books I read before investing my first dollar, like The Intelligent Investor, a little book of common sense, a little book of common sense investing, something like that, and then
Yeah.
interpreting financial statements. So those are like the early going for me, was just head deep into how to understand and value companies,
Yeah.
and
How to understand the company. Yeah.
absolutely. And I spend all my evenings just reading as much as humanly possible. And slowly but surely after that, I actually, this is not the first YouTube channel I've done. I did another one called Phantom Finance, but that was certainly more of a learning curve, kind of all over the place. But for those interested, you guys can check that out, because I think it's kind of comical now. But nonetheless, it was good for just learning. And what people I would advocate for, I know this is maybe a bit of a side thing, but I find making videos and
Yeah.
posting them to YouTube has actually helped me retain a lot of knowledge. Like when you're looking to teach other people, I find that knowledge seems to stick around. So even if for those out there who not necessarily want to do content creation, but maybe just want to, just record kind of where they are, they could even keep it in private mode, but just to do something for themselves. It's really interesting to go back on videos I've made, 2 years ago, and
Yeah.
see where my head was at the time.
Yeah, interesting, interesting. Well, that's good, man. I mean, so yeah, you started pretty much like most people start, going down the rabbit hole, trying to figure things out. Let's face it, there's so much information now. There's so many rabbit holes you could go down. There's so many investing styles. It's so easy to do it now with technology and everything. So let's talk a little bit of how you discover the income strategy, or the cover call stuff, right? The income oriented funds. When did that start? How did that all start?
Yeah, so this would have been late 2021. And there was no videos in particular. It was really just one fundamental question that I had. Again, this is where the rabbit hole can take you.
Yeah.
And I was, trying to ponder the question of like, how can I get more out of a buy and hold strategy?
Right. I had the same
Um,
question. Yeah.
Honestly, and it wasn't because I heard anybody say that. It was just, that's where my like financial maturity took me. And so maybe it was probably December 2021. And I had heard of the word cover call before, but I really paid no attention to it. And maybe one of the first funds I ever looked at was like maybe ZWB, that BMO equal weight banks cover call
Yeah. I
ETF. And
think it's still
I
the
saw,
biggest covered call ETF in Canada.
right. And I want to say, you know what, I saw the yield, and I was, at the time in the early going, having only been invested for a year and 2 months at the time, I was, it was a bit of programming, I won't lie, of like high yield, unsafe, high
Right.
yield, danger, stay away, don't pay any attention to this over here. So you know what, I kind of shelved that mentality, knowing that,
Mhm.
maybe, okay, well, let's just look into it. What's in this cover call strategy that might be able to benefit me? And so again, new rabbit hole started, and I mean, really, my core thing was just, how do I make investing easier for myself so I can do
Right.
other stuff? Like, I want to pursue other, business opportunities wherever that may take me. So how do I streamline and be confident in an investing style that I can live with for decades to come? And then I want to say maybe the first maybe couple of channels. I will say this, Adriano, that yours was, I think, yours was maybe the third channel I came across. It was by far the first channel where I was trying to put this idea of cover call into words and
Yeah.
understanding and the text. It wasn't until I really found your channel that even though I was already kind of meandering in that direction, where I was like, all right, this is what this is the language I'm actually trying to learn. The first couple of videos I think with a lot of people who watch finance YouTube, they watch, Graham Stefan and Andre Zick. And I think Andre Zick, in one of his videos, he had a friend of his come on that dealt with options. And I don't think the guy posts anymore. I haven't watched any of his videos in a while. I think it was called Pandrea Finance. And he just talked about options, like
Right.
no ETFs or anything. And so kind of got a little bit of an introduction to options. And then I found a bit of a smaller channel, Nick LaForge. I was interested in him because I was trying to research XYLD at the time, and that guy owned XYLD. And so, but not that he had I would say, a PII mentality. I think it was kind of just more hybrid. He was just incorporated some cover call stuff in there, but he talked a lot about XYLD. So I think that again was kind of the next step. And then I think I eventually I found your videos, and that was the game changer, as far as just leveling up my understanding of what cover calls and PI is all about.
Yeah, well, I'm honored, man. I kind of had the same trajectory. I started discovering the funds and started looking into them, and any videos I saw, I never saw anyone go all in on this strategy. Every person I saw kind of use cover call ETFs tactically, like you said, a hybrid. I never saw anyone go all in. As far as I know, and I'm probably not the first, but I think I'm the first who I decided this could work. I could go all in on this, and that's what happened to me basically after going down the rabbit hole myself. So what are your, and we're going to show your portfolio in a second. We're going to show it from Blossom. Your portfolio is on Blossom for everyone to see. We'll take a look at it in a second. What are your investing plans right now? I mean, you're working full time, right? You're working full time. You're kind of doing the investing a little bit on the side. So are you reinvesting everything every month, or?
Oh yeah, I'm putting horsepower behind as much of those investments as humanly possible. So so for me, and maybe for people who are now living out, say, that the PII lifestyle, I'm in the very opposite. I am in full mode accumulation as best I can at the moment. And of course, doing the channel as well. I mean, my work schedule is just hectic. I probably work about 50 hours a week. I spend probably 15 hours in my car every week. On top of that, with family, with 3 kids and a
Yeah.
mortgage, right? And there's stuff outside of that as well. So, and then of course doing the YouTube on top of that. But I mean, the YouTube portion is really where I feel like I can branch off and of course pursue the business endeavors. But yeah, basically right now the main goal is just reinvest as much as I can. I have, like you said, when we get to the portfolio, I'll kind of just give
We'll
it
take a look at
a
it
little bit.
shortly.
I'll put a little more meat on it as to like what I'm trying to do. But yeah, no, just reinvest. I don't withdraw any of it. Don't touch it. I'm not interested in touching it. I'm much more interested in just accumulating that for the next many years to come.
Okay, so I know I could, after doing videos for a couple of years now, I kind of know the questions most people have. So I already know the most questions that people are going to be asking. So let's unveil the portfolio, and then I'll get into those important questions, I think.
Sure.
I'm going to share my screen here. So here's your portfolio. This is actually taken from Blossom. Sorry about the delay, everyone. So here it is. So let's quickly review it. I mean, I recognize all of these. These are all classic, pretty much, as far as I could see, all broad-based, covered call ETFs, mostly leveraged. So let's go through them one by one. So HYLD.U, this is the US currency one, HYLD, about 12% yield. So take me through your portfolio. Tell me, why you have these funds, what you like about them, how you selected them. Just give me a general overview of your portfolio, if you don't mind.
Sure. Feel free to interrupt, Adriano,
No worries. Go ahead.
if I go too much on a rant. I'll try to keep it as tight as possible here. Okay. So HYLD.U, that is one fund within my wife's spousal RSP. I think there is a little bit of a strategy I've pulled with a spousal RSP that I think a lot of people probably just don't know about. But again, when you're going down the finance rabbit holes, these are one of the things that you might run into.
Yeah,
But
income splitting, right? I've heard of
that's
that, where if
yeah,
you're the one making most of the money, you could split it with your wife by doing a spousal RSP. Correct me if I'm wrong there.
that's right. So I contribute, right? So this RSP is in her name.
Right.
I can contribute to it. I get the
Yeah.
tax deduction. Now, if I decided today to stop contributing to it, and I decided next month to withdraw, I'll get taxed at my marginal tax rate. But if I don't touch it for 3 calendar years, you could technically withdraw from it, and it'll be in my wife's marginal tax rate, which is nothing, right? Because she takes care of the kids, drives them to school, and whatnot. So there is a little bit of a strategy. And so I chose to do that mainly just to give myself flexibility in the future. If I never touch it, right, I still win in the long run. And if I do, so basically, if
It's just
I
compounding away. I'm assuming it's on
that's
drip
right.
or
It's
okay.
exactly. So I invest with that is through Quest Trade, the
Yeah.
spousal RSP. You can't get that through Well Simple. So anyway, Quest Trade's the go-to for that one. Just a lot more options in that regard. And yeah, it's just on self-drip. Like I basically pay no attention to it. There
Okay.
might be a chance in the future that I'll maybe split it off into another fund. I don't really want to hold a lot of funds in this one. Before HYLD, it was actually XYLD for about a year. I held it from August of 22 to August of 23, and I sold off the whole. Like this was one of the lucky, I would say one of the more luckier timings that I've
Right
had.
before it dropped.
I did it the day before everything started to drop,
Wow. Good for you.
and it basically it hit basically the highest point, or roughly the highest point for the year. I think it was like August 13th or 14th, something like that. And then as soon as things started dropping, I kind of just slowly bought into HYLD and just kind of average into it. But like I've at this point, it's over a couple weeks, all the money had been invested into HYLD.u. So I'd like to split it off at some point, just to give myself more diversification among fund managers and strategies.
Yeah,
But
is
for now,
that I was
what,
gonna ask you, what do you like most about HYLD? And you kind of just said my favorite part about it. It's very unique in the way that it has multiple fund managers and strategy, cover call strategies in there.
yes,
But as you probably already know, Hamilton is coming out with more and more in-house ETFs,
yep.
including two very, very important ones coming up in the next couple of weeks, SMAX and QMAX. My strong suspicion is that there's going to be some very big changes coming to HYLD very, very soon, because why have the third party funds when you could have the in-house funds, cut the management fees? So
That's right.
what do you think about that?
You're kind of compounding the fees. And
Yeah.
I mean, I will say this about HYLD and the guys over at Hamilton. They actually stay, even though you're paying their management fee, the underlying management fee, you're paying the leverage cost and the trading expenses as well.
Yeah.
But their fees are actually really competitive with others like Harvest and Horizons. And I think that might not get overlooked for those who maybe don't necessarily do the deep dive and maybe just of course follow us, but still a little bit higher than of course all those, but it's competitive, I would say. So
Yeah.
kudos to Hamilton for that.
Yeah, I know for a fact that they worked hard to get those management fee discounts, bulk discounts.
Yeah,
But like I said, I think there's going to be big changes coming to HYLD, but I still think that I hope they don't lose the uniqueness of it, where they do have multiple strategies in there.
it's true.
Although,
There is sort of like I would say since I started my channel, I've called HYLD the darling cover call ETF of Canada. It's just kind of, there was a period earlier this year that even on Blossom it was the most trade, or well, either most held, most
yeah,
invested.
it
It held.
is controversial sometimes, for sure.
I know it is. Oh yeah, I know we both get it from time, every so often. But for what it is, it truly it separates itself amongst the landscape of cover call ETFs. So it's diversified within the fund. And
Yeah,
again, just my personal thing is just because of like the money that I've allocated to. Basically Hamilton is the one has organized all that. If I sell off a bit of HYLD.u, it might be for like say a Horizons thing, or
Yeah.
something, right? So, but yeah, but again, well diversified, and we like that.
Yeah, yeah, and I see all mostly broad based here. I mean, BMAX is Brompton's all in one, very broad based. USCL kind of like HYLD, right? S&P 500 style exposure with 25% leverage with covered calls. HDIF is Harvests. HDIV is the other one from Hamilton's. You got CNCL, which is basically the Canadian USCL.
Yep.
You got UMAX, which is the utilities one, I'm assuming that other 5% there is maybe HMAX.
Yeah, no, I don't know. It won't, that would be eight. So let's see. I got, if I'm just going off the photo here, HDiv,
Yeah, because I see HDiv there, I see HYLD, or maybe that's just another HYLD without the dot
you
U.
know what? Yeah, no. It is. I keep that HYLD in my TFSA. Yeah.
Okay, so
Yeah,
just a
no.
regular HYLD, then you have 9% in other, and you can't see it here, but I saw you had ZWK, the BMO US banks cover call. So basically, let's just say it. You're like me. You're a pure income investor. You're a pure covered call ETF investor here,
Oh
mostly
yeah.
broad based in really the funds that you do have a little bit of sector specific ones like ENCC, and UMAX, which is oil and gas utilities. But for the most part, you are a broad based, covered call, mostly leveraged ETF investor. Do I have that right? You have no split share funds. Looks like you stayed
No,
away from those.
I've stayed
Uh,
totally away from split share funds and just again, the biggest thing I think, even just investing in general, is not to find the thing that not to find the thing that you really like. It's just figure out the things that you don't like,
yeah,
and you don't really have much of an interest in. And so I did that even in the very early going. Right, I stayed away from 3 years ago. Stayed away from the single or the stocks that didn't pay a dividend. I was like, I want a
yeah.
dividend, so I'm just gonna just tunnel vision in on dividends. Yeah, I would say half those funds that you saw there are leveraged, and I know we can agree on this, that leverage over the long term
Over the long, if you're a
is
long-term investor, I would always take personally the leveraged option, even though it's obviously higher fees. If you take leverage yourself, you got to pay those interest costs. Might as well the fund manager take it because they get leverage much cheaper than me and you can. I know that for a fact. So you agree with me there if you're holding
I
something.
do, and especially because you're not on the hook for that leverage, right? Like
Right,
if you
exactly. You're not going to get margin called at all,
No,
right?
and also too, you don't have the same kind of negotiating power that
Yeah, of
these
course.
fund managers do. They can get a lot of these interest rates, I would suspect, bumped down to. I mean, even if you just look at, if you were to take a, I don't know, like an apple to apple comparison, I was like, what can you get out at a bank right now for a mortgage? Well, it's probably
Yeah.
going to be like 6%. A HELOC on that is probably going to be even more. A personal line of credit is probably in the 10% plus range. And then we see the trading fee, or we see the management fees of a lot of these cover calls with the leverage, and they're upwards of in the 1.75 to in the 2 range
Two,
maybe.
even higher than two, which includes the leverage cost. I
Right, but
personally, I don't even look at the leverage cost. For me, you got to exclude it. What I really, and I've talked to many fund managers about this, what they actually make as a profit is just the management fee. So if it's
okay,
65 basis points, that is their profit. That is what they're making. That is their return. Everything else in the MER, it's expenses for them passed
right.
on to us. They don't make money off the leverage. They don't, you know what I mean? So uh, that's what I've been told,
Yeah,
and I mean I believe it. So what they actually make is the management fee. So
yeah. Yeah, no. And then again, just going back to the portfolio. Yeah, I think I've broken up. I mean, with the sector specific stuff, I've really tried to focus on stuff that I believe is just critical to basically to our well-being. It's like, what do we need to survive as a civilization, right? It's I mean, we need
energy
energy,
and power, utilities, yeah,
right? We
UMAX and,
need,
and ENCC, right?
right, and we're not going, and UMAX is, I kind of look at UMAX more as like a critical infrastructure more than, say, like just a generic utility sort of ETF,
Yeah, there's
right?
telecoms in there too. There's
There is,
railroads in
no, for
there.
sure. There is a mix of everything. You got pipelines, communication, you got, I think, waste connection in there, you got
Yeah,
railroads. So it's a bit of a mixed bag, but anyway, to me personally, it's more critical. It's critical infrastructure for the stuff we need.
yeah,
Of course,
yeah.
with financials, it's we're like I don't know, 2 years ago, I thought, not that I thought, but, I think we were hearing more and more about, the Bitcoin would be it was going to revolutionize our world. But here we are 2 years later, and nothing has really changed. So, I think the banking industry probably just wants to protect as much of their, whatever you want to call it, footprint as best as, that's probably the
Of
nice way to
course,
put
of
it,
course.
as best they can. So it's just understanding which industries are going to drive the world forward: finances,
Yeah,
utilities, energies, and technology, of course.
technology. Yeah. It's a good strategy. So, the first advice the thing I try to tell newer investors is go broad, don't
Yeah.
go niche. I'm not saying going niche is a bad thing, but go broad first, get everything. You'll get the average returns of the market. And then after some experience, if you really feel strongly about a sector, whether it's healthcare, whether it's technology, whether it's the essentials like utilities, like we talked about, then you could get that. But I would only ever make it a secondary position, not a primary position. Real estate could be another sector that you firmly believe in. So, I think I'm with you on the strategy. I think we have similar mindsets. We prefer to
Mhm.
go broad instead of going niche. And
I think so too. And like, I know you do your monthly Unveil. Maybe the only structural difference between the two of us, like when you were talking about,
yeah,
the primary position, secondary position, I pretty much have an equal weight. Like, so the all-in-ones are equal to the sector. So I've put 10% for HYLD. Now, this is in my TFSA.
right.
I'm excluding the RSP,
Yeah.
HYLD-U. So in my TFSA, it's like BMAX is 10%, HYLD 10%, HDIV 10, HDIF is 10%, ENCC 10. So, and then amongst, say, the financials, I want to say HMAX is maybe 4%, BKCL 4, ZWK is 1, and call is 1. So
Okay. So you have
I've
mostly Canadian, a little bit in the US one. So
that's
you're,
right. The call and the ZWK were kind of more just, I was kind of just curious. So I put like a little bit just to see. It was more out of like, okay, which one of these US based banks would actually do better? And I'd be forced to pay attention to both of them. So
yeah.
that was more of a just, I'm just more curious than anything. Ironically, they've been my two biggest losers by a long
Yeah, of
shot.
course, if you bought, depends when you bought them, but when the US banking sector recovers, they could be your two biggest winners.
No,
So,
totally. By percentage, they could very well be the biggest winners. But it's just funny to see. I'm like, okay, well, I've got under a 1% allocated to those, or once I've actually get everything kind of in line with the percentages, they'll be like 1% a piece.
yeah, well, that's prudent. I mean, the more niche something is, the more risk it has. Yes, the more reward it could potentially have, but the more loss it could potentially have as well. So this is why I always try to tell people, go broad. You'll avoid a lot of problems. Get your experience first, and then maybe you could go niche. But everyone has to make their own investing decision. So, listen, Jordan, thanks so much for sharing your portfolio, the thought process behind it. I do have two very important questions now, which I know people are going to be asking. You're a
Okay.
young guy. You're in your early 30s. You're working. You pretty much, let's put in quotes, you don't need the income. I hear that expression a lot. I don't need the income. Why would I invest this way? My response is, well, first of all, if you don't need the income, why are you going to work? But that's another conversation. That's I understand what you mean. You're in
Yeah.
your career, you're in the heart of your career, and technically you don't need the income because you still have your job. So my question for you is, you're a young guy, you're working. Why are you going with the covered call stuff? Why not just go with the indexes, with the super low fee growth indexes, and just hold those over time instead of holding these over time? Why?
Right. So I think for starters, it's when we talk about PII, we're also, the discussion is just quality of life and what we're trying to achieve with that. Now my strategy for accumulation is not necessarily say 10 years out, 20 years out. It's
Mm-hmm.
more like 3-4 years out. What I really want to do is get to a point or get to a portfolio size. I suspect it's probably going to be in the 300 to, somewhere, I'll say 350 just to be safe, and maybe upwards towards 400, a portfolio size where I can eventually sell what I eventually have here. I own a condo, and it's appreciated like crazy in the last 6 years, and to
Yeah.
buy back in is just, it's just ridiculous. Like, I don't care to have a mortgage weighing over my head.
Right.
I would rather, and this is the one really important thing about PII and coming from me, who's done a lot of real estate stuff throughout my 20s, it's really kind of flipped the head on like home ownership, and I've kind of gone more to an asset ownership mentality of I would
Yeah.
rather own assets where I don't owe anything on, and that will sustain my living. So for me, what I would do with, say, a portfolio size of $300,000, $400,000 is I plan to actually, go rent a house. I know people would say that rents are super crazy. Why would you go rent a house? You probably do better in the long run running. Well, a lot of the rental competition is in the like under $1,500 range. You start going up to 2,500, 3,000, 3,500 if you can afford it. The competition dies off, and there are some. If you look for it, there are some deals you can get, and I've spent some time looking for it. So as far as ownership and just in my current income, even though, I would say, for a tradesman, I definitely do fairly well for myself. Again, my wife doesn't work, so it's just me. So,
Right.
I mean, if you're dual income, well, I might be compared to like a dual income family. But yeah, I just plan to use that portfolio just to offset the cost of a future house rental. That's what I'd like to do.
You have a
And
plan.
then
It's not necessarily maximizing your total net worth over the next couple of years. It's really, I'm assuming, I'm just taking a guess here, it provides you, you're really building a secondary source of income. It provides you some, um, how could I say this, peace of mind. Is
yeah,
that,
I mean,
would you say that that's what it's doing?
yeah, I absolutely. I mean, it's not to say that I won't be working
Right.
at my job, but like just the way we are able to structure like days off, like I can actually work for more days off, right? Anyways, just the way it works, it's like I can actually, I would have the ability to take probably about 4 years from now. I could probably take about maybe 12 weeks off from work if I really wanted to. Just way overtime structured and what we call bank overtime,
Yeah.
plus regular accrued holiday pay or holiday time. Um, Ideally, though, so I would say that is just more like if I wasn't doing anything else, if I didn't pursue any other business endeavors whatsoever, and I was just working towards something, that would be kind of the de facto plan. Yeah, I would like to, of course, expand business opportunities and whatnot through YouTube and whatever else might come. So that is still the book on that is still being written out, but at least for this other portion, that's what I would like to do is be able to offset the cost of a future house rental.
Okay, so you have a plan. It
Yeah.
seems like you really have goals and objectives. And my last question for you, and thanks so much for taking the time. What do you like most about this investing strategy? What do you love about it so much?
Oh man. So, and even peace of mind right now is knowing you're going to get paid every month.
Yes.
Uh, oh, I can't. The idea of not getting paid for something. I remember. I think Kevin O'Leary kind of said it best, right? One of his, viral clips, right?
One of the most influential clips I've seen. That,
right. He's just
yeah,
he's like, I don't understand why people wouldn't get dividends. Now, I'm not going to be so dogmatic to say I don't understand. It's like whatever you do is fine. It's
yeah,
just for me. I like the idea that I can still get some appreciation, over the long term if I keep it, and the compounding effect every month through the distributions, along with con- contrib. Oh, uh,
contributing
yeah,
more plus the
contribution,
leverage.
yeah,
Yeah,
plus the leverage. You have all these other factors that can allow you to just compound over time. And I would say one of the big hooks for this strategy is less is more. You can do a
yeah,
lot more with a lot less.
that's true.
Whereas a lot of other with a lot of other YouTubers that I follow, I'll use maybe Andre Zick as an example. I think maybe a couple months ago he revealed his portfolio, and it was like a seven. Like his dividend portfolio was something like $700,000, but like his average, like what he was getting every month, and I'm like, gee, like I'm just saying, I'm not far off from that, and my portfolio
Yeah,
is
probably have double or triple the yield.
like
You need a lot more. It goes back to that fire rule,
yeah,
where that 4% rule, which I think is nonsense because 4%, it's basically, you could do it with half the money. If you're making 8% yield, you could do literally with half the amount that the fire rule dictates. If you're getting 10 or 12% yield, even less so. And so it is true what you say. Less is, you don't need as much to get that cash flow, that financial independence. And let me know what you think about this. I think there's a lot of misconceptions around financial independence, retirement. So when I think of retirement, it's not just, we discussed this early off camera, collecting seashells on the beach, even though I could do that right now if I wanted to, or sitting on the sofa all day and watching TV. For me, it's more you're retiring from your 9 to 5 slavery life, your financially dependent life. So I think there's a big misconception about retirement. What do you think about that?
Yeah, absolutely, Adriano. Yeah, as we were saying, the idea of retirement is it has just more to do about freeing up your time more than
Yeah,
anything. I, I, you know, I don't like the idea that I'll put it you this way. I find in my opinion, my time is way more valuable than anyone could ever pay me for. You could pay me,
for sure. It's the most
I
valuable
mean,
commodity of
just
all time.
from
Yeah,
just from like the entrepreneurial sort of the like mindset, it's like you could pay me, any amount. I mean, at some amount it'll obviously be substantial, but for the average person, for what you make, I think in Canada, I think our average income per year is 55,000. We're slowly losing out to the US, and that gap keeps getting bigger of average income comparisons. Um, yeah, your time is worth so much more to you, so take it back. And the only way to do that is by, for me, it's investing in a strategy like this, and
an income.
one
You got to
where,
create your own paycheck. If you want to not go to
yeah,
work, you got to create your own pay. It's not rocket science, right? It's
no,
just,
but for people, and I get it for maybe newer investors, because I think Adriano, you were there, I was there at one
yeah,
time, where there's just a lot of stuff with investing, and
yeah.
it's just you really, as soon as you get more into it, there is just simply more financial maturity. Hold on, Adriano, we might have to cut. I wouldn't. You might have to cut this part out. My wife and my 1-year-old are just getting home.
That's okay. No worries.
I gave them. I'm like, I won't last. It won't
I'll
last more
pause
than
it. I'll pause it for a second. All right, so we're back. So Jordan, thanks so much for sharing everything. You took a lot of time here to, describe describe what your thought process, your life and what you like most about the strategy. And I'm happy to announce that, I like to think I had something to do with it. You created your own YouTube channel. I see you have a hat with your logo on it. You use a
Yeah,
nice little logo that
it,
kind of
it's
looks
it.
familiar to me.
I was gonna.
Uh,
It's a little self-serving, Adriano, but yeah.
It's all good, man. Covered call ETF investing. You have 33 videos. You started about 6 months ago. To my audience, please encourage Jordan here. Subscribe to the channel. I want to see 1,000 subscribers. Come on, guys, let's go. Subscribe to the channel. And you talk about pretty much all the funds that I talk about, right? HYLD and HDIF and BMAX. And obviously, you're going to talk about the funds that you own. And you compare the funds. And when new ones come out, you will. So tell me a little bit about the channel, what you cover on the channel, what your plan is for this channel. Go for it, man. What is
Yeah,
it
I
all
mean,
about?
I think in my own mind, not that I mention this in any videos, but I'm very much in a experimental phase. Again,
Hmm.
I've done other YouTube channels in the past, over ever since YouTube's been around, but this is really the first kind of like I'm really serious about being an entrepreneur about this, and when it comes to saying like I am a content creator, it's not being sheepish about it. It's like, yeah, man, I'm a content creator, and
Yeah.
I love sharing knowledge and what wisdom I do have, I guess, with a strategy like the one we're into right now. So, yes, a lot of it, Adriano, is sharing funds, what they're about. Every so often, I'll sprinkle in something different. Like you can see the top here, I did my first, like I would say, one-on-one with someone in the financial industry, Martin Pelletier. He's really active on right at the top.
At the
He's
top,
really
okay.
yeah, right at the
This guy?
top. Yeah. He's really active on Twitter, and he's a wealth of knowledge. Like follow the dude on Twitter, or X, I guess. He's I think his company the company's with Trivest. They manage something like $27 billion worth. They incorporate cover calls into it.
And you talk
The
about
video right
covered call ETFs. That's cool.
Yep, and the video right beside it was just kind of me, just kind of sharing more of like what I think the audience has already heard here is you know, what I do for a living, and kind of just encouraging, like, if you're not really sure, like maybe some people might ask us like, hey, Adriano, Jordan, I don't know what to do, like to put money away, I got to be making money, I'm not sure what to do. And in that video I talk about the trades and all the sort of tax credits, grants, and everything
Hey, there you
available
are.
to. Yeah, that's right. Yeah, no,
Is
on
that your
top of it.
logo on your work
I
helmet?
do. Yes, I
That's
do.
awesome.
Yeah.
That's so
I
funny.
I made up a bunch of stickers, and I just gave them out to random, like, you know, to people that I work with and people I didn't even know. I'm like, hey, do you want a sticker? And tradespeople love stickers. Oh goodness me, it's like an extension of their selves, like a goalie helmet or
Yeah,
something.
I gotta get
So
some too, I guess.
so it works well with again with the hard hats. You know, every so often someone will be like, what's that right above your name? I'm like, oh yeah, that's my YouTube channel. So
Awesome.
again, just before finishing up,
Yeah.
it would yeah, right now I think it's just, again, more kind of experimenting, you know, how can I kind of be, you know, I'm not you know, people, I'm sure just because I'm so small, it's like, oh, maybe that guy's trying to be, you know, piggyback off of Adriano, but that's really not the
We
goal
all
here.
gotta
It's like
start somewhere, man.
and it's like this finance, the finfluencer space is, there's tons of guys in it talking about the same stuff. And you know
Yeah.
what? There's, like, as far as I'm concerned, I can't find anybody else that talks about this other than you and myself. And you know, you've done a great job with that and influencing tons of people. What I've told, well, what I would like to say for those who are on Blossom, and I would to say give Adriano credit for, is those sections on Blossom that talk about most held, most invested.
Yeah.
You know, I really wonder where the HYLDs of the world, the HDivs of the world, the all of those cover call funds, where would they be without your channel? Where would they be ranked? In my opinion, be ranked a lot lower than what they are there. And I think
Yeah.
that is a big thanks to just the kind of content you create for everybody. And so when it comes to sponsorships and all that good stuff, it's like totally earned and deserved.
I
So
appreciate it. I appreciate it, man. I wish you luck on your channel. I hope it keeps growing. I encourage everyone to subscribe. I just subscribed. I want to see 1,000 subscribers, guys. Please encourage Jordan. I think it's a cool channel. And why not? You know, I always say you should always get different perspectives. We talk a lot about the same ETF, so subscribe to his channel and we'll be following it closely. So Jordan, thanks so much for taking the time. I'll let you, I know your kids are back, so you're busy, you gotta go. So thanks for taking the time and keep going, man. Keep creating those videos and please be careful at work. All
oh
right, be
yeah.
careful. Yeah, talk to you later, man. Take care.
Yeah, sounds good. Thank you.
Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, PASSIVEINCOMEINVESTING.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.